Alrighty, so now we're going to actually look at a real chart. How do we identify where there is resting liquidity in the markets? Where are those resting orders? That untapped money that may be sitting there. Well, remember the bare minimum definition of where I will start to or anticipate that there is liquidity sitting below the market is when you actually have a low, right? A fractal high or low. So I won't be drawing on this time frame liquidity below the low of the candle. It needs to be this actual low here, okay? So again, I wouldn't draw the liquidity below that bearish candle because price has already tapped into it. It's not a structural low. This is where the low is. Likewise, that's where the high is. There's liquidity behind there. There was liquidity behind there. Just zoom out, right? That's the structural high. We move down, liquidity gets left behind there. There's untapped orders behind that structural high, and then price moves into those liquidity pools, okay? So this is, or what I'm gonna do in this lesson is not really anything that systematic or that you're gonna be directly sort of implementing into your trading or trade plan. This is just kind of gonna be a very loose way of just scrolling through the charts, showing you where liquidity is and kind of just getting your eye for it. And like I said, as we go through the next lessons, that's when you'll learn okay, how do we actually now implement this and make it as a tangible piece of the systematic framework that I use and put it into your trade plan, right? So without kind of even drawing on structure and supply and demand zones, you can just zoom out and you can see what's going on here, right? Like we have, all of these relatively equal highs building along here. So we almost get that support level, right? People selling every time we come up here. Again, support and resistance traders going to be getting short. Tons of liquidity is building up here. And eventually we get that aggressive breakout to the upside as all of that buy side liquidity is tapped into. And then we get that aggressive retrace to the downside. And if you zoom in and kind of take that move apart a little bit within here, what do we have? We have that ascending trend line, right? That trend line liquidity building below those lows. So we know there's a ton of resting sell side liquidity below there, a bit of a mouthful, and then price comes down and taps into those orders. Then we've got relatively equal lows here, right? Another support level. What do we know? There's resting orders below there. So then when price comes all the way below there, again we get another bounce here, just generating even more liquidity. We get that triple bottom, people getting long, have their stop losses below those lows, and then price taps into that orders, it rebalances price, and then we get the pullback, right? So that's why we say every time we have a break of structure, what do we typically expect? We expect the pullback as that resting liquidity is then tapped into, right? Same thing again here, start to build a bit of a range. We get sort of these triple bottom lows, tons of liquidity starts to build below that, and then eventually we get the breakout of that. Then what do we leave? We leave these equal highs here, tons of buy side liquidity is left above there, right? And eventually price will come up into there, and as price takes out those highs, just tap into it, right? Barely, doesn't have to be a big tap, just enough, and then we start to see a bit of sensitivity as that buy side liquidity is tapped into. Even on a more granular level, if you really zoom into price, let's take a look, what do we get? Or even down here, right? We get that ascending trend line, people buying that trend line high, and then we get liquidity resting below that. Now, just because liquidity is there, we never know when it will be used, when price will tap into it. We just know that it exists, and at some point it may be used in the future, because as we can see, right, the trend continues to the upside. We have a fractal low here, so yes, that to me would be liquidity sitting below that low. As we can see, as soon as price just trades just below that, we get a sweep, and then we move to the upside. Resting liquidity above that high, what do we get? We get a sweep, and then we pull to the downside. Then we get a sweep of the resting liquidity below the most recent low, right? And then that fuels the move to the upside, right? So we'll talk about this a lot more in near future lessons, where we talk about sweeps of liquidity and how that can generate the continued moves. But essentially, when you see highs and lows like this, especially when they're kind of near each other, you can see you have that boxed off range. So people selling the breakout of their range, they get short. What happens? They get smashed as price trades back into the market. Likewise, people buying the break of this high here, if they got just tapped in trying to buy that, price trades in. So you get a lot of manipulation when that can happen.